The program is in touch. I'm Jenny McGee for our Hall Communication Stations, and on the phone with us is Dan Cunningham. He has a financial firm he started called One Day in July.
Hi, Jenny.
Hi, Dan.
Like everyone else, we're spread out and working remotely. It's a new world, and it's clearly a new financial world for a lot of people.
Before we get some of your input on this, because, of course, with the coronavirus, it's a crazy business world all over the world with this thing going on. Your financial firm, One Day in July, when did you start that up?
Started One Day in July in 2016, and it really was a firm that focuses on index funds and how to invest people in a way that they can see what they're paying us and what they're paying other financial companies in a way that really brings in the academic work that's been out there for 50 years to help deliver the returns of the equity market and the bond market to them over time and not to the financial industry.
I saw some of your website talking about fees that you pay financial folks out there. You said if you're paying more than 1%, you're paying too much?
You're paying, in our opinion, much too much at that rate, and many people are far above that. And the problem in this industry is that it's difficult to know what you're paying or how the financial industry is making money. It's not made particularly clear to clients. They trust somebody for good reason, but it's hard to understand all the different avenues that the financial people have come up with to make revenue. What we try to do is we try to say, look, we have a very clear payment structure. People can click on one link next to the logo on our website to see it. And then we try to act in their interest only and help them through this complicated world.
And it's become a lot more complicated. Dan Cunningham with us. He is the founder of the financial firm One Day in July, which is in downtown Burlington. This is a strange world, this whole collapse of business because of people staying home, and the stock market has been reeling for these couple of weeks. It's only been a short time, but the numbers are pretty staggering.
Yeah, I think that short time, Jenny, is something that it's hard to almost believe. It's really been a week and a half or 2 weeks, and it seems like it's been ages. In fact, I don't generally quote Lenin, but I think he has some kind of quote like decades sometimes happen in weeks and weeks happen in decades.
A lot of people panicking, and of course, many people do have 401ks and whatever investments they have or financial advisors. Many of us don't have a clue, and I'll admit to that, even though I've got money invested in. We're all not sure how it all works one way or the other. And that makes it even more puzzling with the headlines beyond the virus itself being the stock market and just the whole business climate going on for all of us.
There's an American economist named Hyman Minsky, and he once said that stability breeds instability. And it's a great thought because at the end of last year, we had really almost 12 years of very stable up markets. And when that's happened historically, it doesn't predict an unstable event, what's called a black swan, something that comes out of the blue. Stability can lull people and investors into a sense of confidence, a false sense of confidence. Suddenly, when we're hit with this very real world shock, all of those stability assumptions are really out the window. And markets are reflecting that. And anyone kind of following the news can see from day to day, the market will be up 7 or 10% one day and then down 12% the next day. The markets are trying to figure out where reality lies. That's what's happening right now.
So what do people do? Just trying to figure out if they're not going to be able to retire anytime in the near future, or whatever their investments might be. This is unprecedented to have something like a big illness plaguing everybody around the globe, and it stopped work as we know it.
This is unprecedented on almost any scale. Maybe in a week or two in 1929 and arguably a short period in 1890, even versus the financial crisis in 2008, this is extreme. And maybe we could talk about a couple things in the broad economy, and then I could offer people a few ways to look at this that might help just psychologically in times like this when you're thinking about your investment. In the broad economy, this is so unprecedented because we've really stopped the economic flywheel. because we have to for medical reasons. I've read a lot of economic history. I was trying to find the last time we've done that, and we've had economic slowdowns. But I think the last time that something just actually froze was probably the Black Death, which is in the 14th century. This is very much like taking entire industries and stopping them is not something that anyone has any familiarity with. The juggle here is how long can we do this, and how do we offset the very real medical problem with the fact that transactions aren't occurring for much of the economy. And that's really what's different. In an average recession or even a deep recession, business might be down 15 or 20%. That would be a pretty deep recession for a business. But here you have a business in many cases down 100% or close. That's really what we're trying to figure out and adjust to.
We'll see how it all comes around in the end, but nobody really knows. And I think that's also frightening.
It frightens people, first and foremost. It frightens markets. And something to keep in mind is probably not feeling great. I don't think anyone is. But if you are okay, you have your job, keep in mind that some people are in real trouble. And I think that this is a time to, as much as possible, given that we're all socially fairly isolated, this is a time to reach out more than ever. That makes this difficult. Being socially isolated from one another is making this particular crisis that much harder.
Even though we do have technology these days that really does connect us or enables us to connect, it's still not the same. Dan Cunningham is who we're speaking to from One Day in July, his financial firm in Burlington. And a lot of people do have a lot of questions, and we talked about health and relationships and employment all on the table, but also for folks who have been putting away money one way or the other or investing or have 401ks. What kind of questions are you hearing from some of your clients and from other folks out there?
Everyone wants to know the future. You need to be very aware that when you start dealing with the financial world that nobody can predict the future. People can sound confident about where they think things are going to go, but there's just no evidence that anybody can predict the future. That's very important to understand. You can be sold a product pretty easily in a time like this that you are not going to want to own 10 years from now, largely something like an annuity or whole life insurance, because someone is going to sound confident. And I cite those two because those are two areas you really want to be on alert for. Annuity salesmen and whole life insurance people come out at times like this. We have seen many, many annuities that were sold in 2008 and 2009. It's something to just be aware of. There's a lot of emotion. And maybe I could give people 3 different things to think about when they think about their financial situation that might help. One is you're probably aware by now that your retirement savings or your investments are down. They generally are in most cases. One way to think about it is it's not that it's necessarily going to go right back up. It doesn't necessarily do that. But if you look at where you are today and you say, okay, if I had 70 to 75% of the money that I have now, am I okay with that? What that does, it puts your mind in a spot where you start to think, instead of kind of watching the market every day, which is really not helpful, you think, well, okay, I'm already mentally there. I'm at that spot. Anything above it is kind of gravy. And it would take a very, very extreme event to get an average stock and bond portfolio below that point. It's not that it couldn't happen, but it would be very extreme from here. We've talked to a lot of our clients about that mental trick, and I think that people find it helpful.
So annuities, are you saying they're not good or maybe just not at this time?
I would generally never recommend buying an annuity. They're very high fee, they're very complex to understand, and they're extremely profitable for the people selling them. From my experience, they're generally sold with an element of fear in mind, and they promise certainty, but there are much, much better ways to achieve that type of certainty at a much lower cost.
There are a lot of different ways to invest, and of course here we are in this crisis around the globe, and everybody's worried about paying bills and having enough money for their kids' college or whatever their retirement down the road. And even if you're a young employee, should people panic or sell off, or what are you advising in this climate?
Yeah, that's a good question, Jenny. I would say really try hard not to panic. And if you feel yourself panicking, try to take a break from the news, especially the financial news. Warren Buffett always says, and I think it's really good to take this to heart, and this is sort of my second psychological trick, is you really need to drive looking through the front windshield as an investor. And our natural human tendency is to drive looking in the rearview mirror. But great investors always are looking forward at what will happen, even though everything about us wants to say, well, I lost money in the past, therefore I should not invest, or I should just stop where I am. Or if people are making a lot of money, they'll say, I've been doing well, I should do this even more. What you want to do as an investor is you want to have a dedicated plan and then stay the course through up and down markets. And that is easy to say and very hard to do. We spend a lot of time at One Day in July trying to help people stay the course.
When you're conveying when to buy, when to sell, what to buy, what to sell, or what to invest in, a lot of us have no idea. You've set up a 401k and then they give you windows to change your investments around if you want to, but a lot of us lay people have no idea.
It's a huge problem. 401k in some ways is one of the biggest problems in the industry because the financial companies will put often relatively high fee funds into the plan. And then even if there are good options, good index funds, the defaults will generally not be to use those index funds. This is an area where it's hard to even know for a lot of people what to focus on. But what I generally recommend is to focus on the cash flow of what comes out of the fund, and that's dividends from bonds and from stocks. Because dividends and interest are much more stable than stock prices. They do occasionally go down in an index fund, but not to the degree that stock prices move up and down. When people start paying attention to that, they feel more comfortable because they realize what they have is an ongoing stream of cash coming from bonds and from stocks. That's one of the things that's important to know is the financial industry has gotten very good at convincing people that they have all of this esoteric knowledge. And there's just an enormous amount of evidence that shows that they actually don't add any value at all. In fact, for the most part, with those high fees, it probably detracts value from most people.
So a lot of people should watch what their fees are, and a lot of people should realize that no one really has the crystal ball, but there are financial advisors and people who have knowledge of the whole financial industry like yourself, and you're probably always still learning too.
So definitely people that are adding value in the sense of helping clients with things that can be controlled. And when I say not adding value, I mean like people who are out projecting the future. The chance of them being wrong is extremely high. But advisors that come in and say, look, what are the things that we know? What are the things that can be controlled? Things like, what am I paying in fees? How is my asset allocation designed to protect me with diversification? Going through simulations ahead of time in a crisis event or a very bad market, let's look at ways that you might behave because maybe your behavior is going to be different than you think it is in a bad time. That is all really valuable if people are doing that with you. Going out and saying, I think this stock is going to be up or down, or Europe is going to do well versus the United States for these reasons, it's been shown to be basically a coin toss. The single best thing you can do is right now, while you're at home, open your statements and figure out your fee structure of what you're paying the financial industry, because that's the easiest place to pick up returns is to make a change there. As markets go down and you're still paying the same high fees, the effect is actually much worse. It really wears out the portfolio much faster. But that is something you can control. You cannot control the market. Worrying about the market is not going to help in any way, but opening your statements and saying, how much are the different financial people taking from this is something that is in your control, and this is a really good time to look at that.
We've seen Wall Street hit the headline.
At this point, it's almost daily in the news. Try to keep a long-term perspective. That might not be 6 or 9 months. It might be longer than that. It might be multiple years. But great investors really take a long-term view. Try not to watch financial media. It almost certainly will make you panic. There's not a lot of evidence, I don't think, that it's going to help.
We've been speaking with Dan Cunningham, the founder of One Day in July, the financial firm downtown in Burlington on College Street. I do thank you for your insight into the world of finances.
Thank you, Jenny.
I want to thank all our listeners for tuning in. I'm Jenny McGee, and you're in touch.